Good afternoon, everyone. Welcome to my video update. Today's October 10th, 2012. This is my first video update for the fourth quarter, and I can tell you they're going to get more exciting this quarter as things go along. Not because I'm an exciting person, but because we have, of course, the presidential election coming up, and on my side of the business, we have the corporate earnings, which is going to be very influential to the stock market moving forward. Starting off with corporate earnings, I can tell you that it's going to be a little scary out there because we're seeing a lot of companies really, guide lower moving forward. And, we're seeing earnings levels we haven't seen since back in 2009, and people are a little worried right now. And we can see that in the equity markets. Even though Alcoa started off the earnings season last night with better than expected earnings, there is a sell-off in the stock and then the market. The market's down over 115 points right now. Look at it close, it's for its lowest close, or its first three-day decline that we've seen in a long time. So we might get a little bit of a correction here. That's perfectly healthy because we've seen such a run-up. And personally, and for all my clients, I think I'd like to see a correction, and therefore we can get back into some positions at lower levels. We don't have that much allocated right now to equities because of the run-up, and we have taken some off the table. Many of you have gotten the statements. One other thing I do want to mention is I've gotten a lot of questions on how the market can go up with everything from a recession in Europe to China slowing down. GDP in the U.S. is barely 1%. How can the markets go up? And the very simple answer is the Federal Reserve. They are going to print money, which means that they're going to buy bonds with this money. By buying bonds, they're creating a false sense of security that there's a demand for them, therefore keeping the prices of the bonds higher, meaning the yields are very low. Okay, and people who want income or want higher yield are going to have to go for riskier bonds or into the stock market with income-producing stocks. We need to be careful about this, and we're really not involved very much with the government bond area anymore. We've gotten out of that, and we're more on the inflation side. But just to let you know, how we are benefiting from this on fixed income is we have substantial amounts of money or percentages into corporate debt and emerging market debt. Between the two, we're averaging about 5% annually on a yield, which is obviously much better than we're going to get on a 10-year bond, which is at like 1.68. And then on top of that, they've both appreciated about 7% this year. So these are the areas we're going to focus on. And like I said, with the market being down 120 points right now, these positions are up on the day. And they've actually been going up as the market goes up, and they've been going up as the market goes down. So really happy about this. And we're going to stay here until it doesn't work anymore. When it comes to stocks, I do want to allocate more into that, into the equity side, but we just have to wait for the appropriate time. And it looks like that we are going to be getting a sell-off, and but again, it's perfectly natural, especially after the run-up we've had the last couple of months. Finally, the last thing I want to mention, DMP Asset Management is having its third annual coat drive. This starts today, and it's going to be running till the Friday before Christmas. If you or anybody has used coats, that are just sitting in the closet, I know we have some, please, let's donate them. And you can drop them off at my office. I'd be happy to pick them up at your house. And, let's get those into the hands of some needy people, because we know right now people really do need these coats, especially, with these hard economic times. With that, if you have any questions, please give me a call when you can. And to my clients out there, thank you for being my clients. I will continue to do the best I can for you. Have a great day.